Hi friends, have a look at this article and you will note that more than 1000 stocks have corrected by almost 30% from their peak price. Also have a look at this article where it is talking about more than 640 stocks have now hit 52-week low price. There is a sheer panic in the market where individual portfolios are now down by almost 20%, 30% and even 40% for some people. If you look at Nifty, it is down by 12 to 13%, but Nifty is not the major concern here. The major concern here is our individual portfolio, and for some of us, it might be down by let's say 20%, 30% or 40%. So the billion-dollar question that everybody is trying to find an answer for is that have we seen the bottom of the market yet, or is there going to be more pain in our portfolios? So this video is going to give you a lot of data-backed insight so that you understand what is exactly going on right now in the stock market. Before I start, just a big thank you to Rishi for this beautiful comment. I am nowhere near Harsha Bogle's beautiful commentary, but this comment I will remember for a long time. So a big thank you, and let these comments continue to come in because they motivates the core of me, and these kind of comments help me bring lot of content to you at zero cost. If you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. With that, let's get this video started. So let's try to understand whether the markets have hit the bottom or still there is more pain coming. So markets make the bottom when sellers stop selling, right? They're not selling anymore. Therefore, buyers take the control and then buyers start to buying the stocks, and then we see the recovery. So in Indian stock market, who has been selling aggressively? We all know it has been FIIs. They have been selling aggressively. So if you look at September 2024 onwards, since the last 5 months, market have been continuously falling. Why? Because FI have been selling aggressively. And now let me present to you some mind-boggling data about FI selling in the last 5 months. Have a look at this data that I have compiled from CDSL website, and you will note that this is showing us as of 31st of August, FIs had around 75,53,000 crores of market exposure in terms of Indian stock market. And as of 31st of January, that has come down to 67,76,000 crore, meaning overall in the last 5 months, FIs have sold almost 10% of their stakes, which is around 7,77,000 crores worth of selling that has happened by FIs. Now, if I break it down for you by sectors, you are going to note that, for example, oil, gas, consumable fuels has gone down by 26% from a FI's perspective. This has been the worst hit sector. Secondly, power sector, for example, 23% of the stakes have been diluted, followed by, for example, media, entertainment and publication, 19% down, and then automobile is also down by 16%. And if you see all other sectors, they generally have been down, but these are the 4 sectors that have been massively hit. So in your portfolio, if you have any stocks under these 4 sectors, then please understand that a lot of selling by FIs have now done, and chances of more selling is now reducing, diminishing. I can't say that no more selling will be done, but this is intense selling in these 4 sectors. So if you are holding any stocks in these sectors, please understand that a lot of damage has already been done, and hopefully things are likely to get stabilized. The second thing you will quickly note is that the textiles, utility, chemical, these 3 sectors have been doing better in terms of FI selling because there have been very little selling done by FIs in these 3 sectors. Now you may have a natural question that, Rahul, is this 10% selling by FIs, is it unprecedented? Is it something that we are seeing first time, or has this happened earlier as well? So what I did was I analyzed 2 previous corrections. Let me now present you some mind-boggling data. So first correction you see on my screen is between October 21 to June 2022, where Nifty fell by almost 17 to 18%. And if I look at the FI selling during that period, you will note that FI sold almost 19% of their stake, which comes out to be around 10 lakh crores worth of selling in Indian stock market. So it's not that what we are seeing right now has happened first time. Second correction that I looked the data for is between November 2022 and March 2023, where Nifty fell by almost around 10 to 11%. And at that time, FIs had sold around 10% of their stakes, meaning which is around 5,27,000 crores. So I've analyzed these 2 corrections that had happened since COVID period. And now we are of course seeing the third correction here, where we have almost seen similar sort of a selling. So we, in my view, are looking at almost at the bottom in terms of the FI selling. But let me now present you some more macro related data that we need to understand whether other things are playing into it or not. The first positive and good news is that US 10-year Treasury bond yields, if you look at the data, it has started to come down now. It is now at almost 4.47%. Just some context for new people that if you look at the bond yield from September onwards, September 2024 onwards, as the bond yield started to go up, what happened was that a lot of FI investors started to pull the money out of emerging markets like India because they were getting better bond returns in US itself. So they started to pull the money out, and this pattern continued right up to January, where the bond yield was all-time high at 4.8%. But if you see now in the month of February, the bond yield have started to come down. At least it has started to calm down. In my view, it made its top here somewhere at 4.8%. Again, I'm not an expert in the US Treasury bond yields, but clearly 10-year bond yields, if you look at, they have started to come down. In my view, that's a very, very positive signal. And if it continues to come down in the next few weeks, then FIs are forced to come back to emerging markets like India. Second, very, very important macro that you need to understand is the US dollar index. Again, have a look at my screen. You will see that since September, October, the US as a currency started to really become very, very strong. US dollar index almost became 109, which is very, very high. And when US currency becomes so strong, invariably money goes into US economy, and that's where money started to pull out of emerging market like India. But now if you see very, very recently, if you see, this index has started to come down. In fact, it has come down to 106. Therefore, there is some positive signals here as well from a dollar currency strength perspective. And I think that's a very, very good news from an emerging market perspective. Whether it can come down further is the question that, again, I cannot speculate, I cannot project it here. But if it comes down slightly further, let's say to 105, 104, 103, then we are likely to see good money flowing back into India. Third macro factor, which is India's problem or India's opportunity, whichever way you look at it, is the Indian currency depreciation. Have a look at my screen and you will very quickly note that we saw rupee hitting all-time high of almost 87.5 somewhere here. And in the last few days, it has started to appreciate now, and it is now at around 86.67. In my view, there may not be a lot of scope. It may not go to 88 or 90. Again, depends on RBI's interventions in terms of how it saves its currency. But right now, the initial signals are that our currency has started to now gain back. So hopefully when that happens, that's a positive sign for Indian stock market, as the money will go back into Indian stock market. Fourth factor that we need to also understand is how has been our Q3 2025 earnings. How's our companies doing in terms of the growth in profits and sales? Have a look at my screen. You will see that as of 15th of February, total around 2,300 companies have declared their results. And if you look at this very, very nicely done dashboard, you will see that around 1,238 companies have given us positive growth, while 900 companies have delivered negative. Is it a mixed story? I think so. It's a mixed story, but overall, if you look at the sales, grown by 5% year-on-year basis, profits have grown by around 13% year-on-year. That's not such a bad story. Definitely Q3 2025 has been better quarter than Q2 2025, because there we saw a lot of beating in terms of the earnings coming down. This has been slightly better quarter in my view, which is a positive news. The question now comes, the Q4 results that are likely to come in the month of April, how are they going to be? If we get boost in Q4, then there is absolutely good chance for Indian stock market to flourish, because our earnings are growing at a good speed. Factor number 5 is India's inflation. So the month of January 2025, we saw the inflation of 4.31%. So it has come down. That's a very, very good news, because on the back of inflation only, RBI looks at the repo rate cuts. And if this inflation continues to come down or remain stable, then there is a high chances of RBI going for a second rate cut whenever that happens. And when that happens, liquidity in our Indian stock market is going to invariably go up, and therefore that is going to also help Indian stock market. Again, I do not know whether that is likely to happen or not in terms of the repo rate cuts, but this is a very, very good signal that we need to really catch on. Sixth parameter, if you look at my screen, is Nifty 50's valuation. So if you look at the large cap space, Nifty 50 PE ratio at the time of recording this video is at 20. This is a very, very good valuation in terms of attractiveness, because 20 PE makes Nifty lucrative in my view. If you look look at the past trend, you will see that whenever Nifty has fallen down to, let's say, 20 or 19, Indian stock market invariably has picked up because the valuations become really, really attractive. Next point that we need to also understand is the SIP contributions, or our mutual funds or DIs liquidity. Are they getting inflows from SIPs or not? Have a look at my screen. You will see January data, January 2025 data, 26,000 crores worth of SIPs. So still SIPs have been very, very good in the month of January. So there seems to be enough liquidity. Again, there is a lot of noise about SIPs that people are saying that you should stop SIPs. Again, in my view, if you're a long-term investor, you don't stop your SIPs. You continue with your SIPs, because there is going to be a lot of noise created by people that stop your SIPs. Valuations are very high. But if you're a long-term investor, it doesn't matter. Markets move in cycles. You continue to do your SIPs. So far, the SIPs data look very, very positive in my view. Last point in terms of the budget impact. Again, I had created a separate video, full video on budget, but very quickly, 1 lakh crores of income going back to people's hands. That is going to be good news from an economy perspective, but that money is not going to get into people's pocket until 1st of May, because that is the first time they are going to see the benefit of that income tax. Until then, it remains BAU. It remains more a sentimental play, but it is 1st of May when the money actually hits people's pocket, and then we are likely to see better spending, more investments as well. And that is very, very good for our economy. That is very, very good for our companies. Profits are likely to go up, and therefore stock market is likely to recover. I think if you look at these broad 6 to 7 factors, what I am trying to portray here is that there is enough signal now for the markets to start reversing. Now, I'm not saying that we are likely to see a bull rally or a bull run, but my point here is that we are almost at the near in terms of the bottom. We are very, very close to hitting the bottom. It might be another 2%, 3%. I can't really predict point by point or percentage by percentage here, but I think a lot of damage is done now. We are very, very close to the bottom in my view. Looking at all these 6 to 7 macro factors, we are likely to see stabilization followed by recovery, and then potentially a good run up towards the end of the year is what I think is likely to happen. If you like this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It again motivates me a lot to bring such content for you at zero cost. Also, if you're looking for such insights almost on a daily basis, you can consider joining my YouTube member community. The feedback of this community has been excellent. I post almost on a daily basis a lot of insights that I see that helps you make better decisions, that helps you learn investments on a practical basis. Go to my channel, press on the join button and be my guest, or you will find the link in the description or in the pinned comments. With that, let me now also speak about 2-3 stocks where I see the earning growth has really surprised me personally. Let me now give you some data on that as well. The first company is Samvardhana Motherson International Limited. Have a look at this company's PAT. In Q3 2025, the PAT has gone up by almost 20%. If you look at the 9-month basis, the PAT is up by almost 47%, which is a very, very good profit growth that I see in this company. And also, if you look at the company's net debt to EBITDA, so the debt has been coming down overall, which is a very, very good track record. By the way, none of these companies are recommendations. I'm just sharing with you some good growth stories that I'm seeing right now in Q3 2025. Please make sure you do some thorough research before you take any investment bets. Do not take any of these as recommendations here. Also, if you look at the capex injection in this company, that has been going very, very steadily. Now it is coming down, but in the last few quarters, the company has spent a lot of money in doing the capex. One risk, however, I see on this company right now is because this company sells internationally to, for example, Europe, North America, India, China, everywhere. The tariffs could be a big uncertainty on this particular company, but I would highly recommend you to go and do some research. And also, if time permits, I might create a full video on this particular company in terms of what their business model is, what are the risks, what are the strengths, weaknesses, etc. But for now, I think this company in Q3 2025 has done very, very good in terms of profit growth rate. Second company that really surprised me was Suven Pharma. This is predominantly a CDMO company, but if you look at the PAT growth rate reported, it is 104% profit after tax growth in Q3. And also, if you look at their revenues, it's gone up by 39%. And if you look at the main driver of this growth, 101% growth in their pharma CDMO business. Again, I hope you know the basics of CDMO. If you don't, please go and watch some good videos on YouTube. You can start from my channel, subscribe my channel, and I'm hoping that you are going to learn a lot by just listening to my videos. But let's go back to Suven Pharma and have a look at the revenue growth. Again, 40% revenue growth. So overall, I think Q3 2025 has been really, really good for this company. To be honest, I was very, very surprised to see this set of strong growth still coming in CDMO which is very, very good news from this company's perspective. Very quickly, the next company is Engineers India Limited, a PSU company, and you will see important pattern here that in the last 3 to 4 quarters, the profit of this company has been declining. For example, in Q3 2021, it used to do 882 crores, and every year it has been coming down to almost 502 crore. But this Q3 25 has seen some reversal in their profit. It's gone up to almost 881 crores. So again, very, very important reversal that we have seen in terms of the profits here for Engineers India Limited. Next one, very quickly, if you look at the banking sector, SBI, for example, very, very good net profit growth rate of 84%. But for me, the big disappointment is their NIMS, net interest margin, has come down slightly. So that's not a very, very positive news. It has come down from 3.22 to almost 3.01%. But the natural question might be that, Rahul, why the profit growth is then 84%? Well, the simple answer is that if you look at their Q3 FY24, the last year's results, you will see that there was an exceptional loss, almost loss of 9,000 crores, and therefore their profits were down. So the base was down last year, and as a result of that, profits look to have gone up by 84%. But again, this is an exceptional situation. In fact, if you look at the quarter-on-quarter basis, the profits have slightly come down. But overall, from a profit growth perspective, in my view, SBI remains stable. Last one that I quickly want to speak about is HDFC Bank. In my view, slightly disappointment that I see in their results, because if you look at the revenues, they are down quarter on quarter basis. They are also down year on year basis. And also if you look at the profit growth rate, it's been very, very muted returns in my view. I really hope that in the next upcoming quarters, they can pick up in terms of the profit growth rate. Again, repo rate cuts definitely will help them to boost some liquidity as well. Let's see how the banking sector is going to span out in the next few quarters, because right now a lot of people are saying that the banking sector remains undervalued. Now, what I really want you to do is in the comments, let me know any good companies where you are seeing the good earnings growth and you would like me to create some videos on their business model in terms of what's happening in the company. I would be happy to go through your comments and find some common patterns and try to come up with more videos. Also, if you found this video helpful, insightful, useful, then please press on the like button. Let me know in the comments a simple thank you. You can also consider joining my YouTube member community if you practically want to learn investing. With that, I hope to see you in my next video. Until then, keep rocking.